Hey guys, hope everybody's doing well. It's Bruce Dinger. Wanted to go ahead and shoot out yet another video because when I see some plays, I never like to force anything, but when I see something and I see some solid trades, I'm going to put them out there for you guys, and then you guys make your own decisions on what you want to do. But this trade here, we've traded before. A lot of you guys have followed me in and out of the trade, and we've made some money on the trade. There's another opportunity that is striking today, and I'm on the sidelines on it. So I'm looking at going ahead and putting some cash to work on this oldie but goodie. And I think it has a lot of room to run. So I want you guys to do your own due diligence on it, but it's going to be a stock that you're familiar with, one that we've talked about before. And I think, like I said before, our business is all about timing, picking good, solid trades, great areas, great industries, and the timing has to be there. And I think the timing is there now for Teladoc. Ticker symbol is TDOC. TDOC. So let me kind of run you through my thought process. I was reading a couple of reports on Teladoc, and they're just getting stronger and stronger and stronger. And the whole thing with coronavirus, coronavirus, COVID-19 has really gone ahead and accelerated being able to do consultations, being able to have doctor visits online, kind of like what we're doing right here with Zoom, doing things virtually. So Teladoc has benefited from COVID-19. And when we take a look at it right now, and I'm going to pull the chart up. When we take a look at it, we can see that they had a height back in, February of this year of about 308. And this is when a lot of the growth stocks really took a beating. And you can go back and take a look at any really growth stock that was out there. A lot of them have taken a beating. And I think it's all about, it's a mistake to go ahead and turn your back on these stocks and walk away from it. You have to be able to take a look at the right timing. So we see it's basing. It came down here to 129, 129.74 and started basing at that area. And now we take a look and we see that now it's moving up. It's moving up. It's been, and I've been actually in and out of this trade. It's come up, it's pulled back down, taken a little bit of a breather, and now it's resting at 145, and now it's starting to make its way back up, and it's right there at the tipping point before it breaks above the 200-day moving average, and we're at 157.48. So my thesis for this trade is that we should go higher, not lower. I think if it breaks below the my threshold of like 154, I'd be out of the trade. I'd probably be out of the trade sooner because my expectation is that it's going to go higher, not lower. But I'd be looking at about 154, 154.36 as an uncle point, as a way to say, hey, you know what? Enough. It's not doing what I thought it was going to do, and I'll check back in with it later. But I think that this thing has a high probability of going higher. We're at a nice technical analysis shows that we're moving higher. We need to break over that 200-day moving average, but I'm looking at getting in before it breaks above that 200-day moving average. And that 200-day moving average happens to be, I can't see what exactly that point is, but it's what is it, 159.07? No, I'm sorry, 159.86 is what that moving average, that 200-day moving average is. So a break, let's just call it 160 for easy math. A break of 160 would give us confidence that we're going to go much, much higher. And how much higher? What do I think it's going to get back to where the high was over here at 308? Possibly. I think eventually it can. But what I'm taking a look at is near term for me, because I'm a swing trader. Near term, what do I think it has a realistic chance of getting to? So I come over and I take a look at where all this consolidation was, right about this area here. And it kind of lines up with some other things that I'm seeing. And that's about $199, $200 mark. It could be even a little bit higher, but let's just call it 200 again for easy math. Now I take a look, I have my price target in mind. I already have outlined my stop in mind. And now I come over and I say, let me trade the option on it. So I can come over and take a look at October. I can take a look at August. I might go with August. I might go with October. I won't go any closer than that. Just why? Because that's just me. But let's just take a look at the August, for instance. Again, I might do the August, I might do the Octobers, but I'm definitely doing the 140 strike price is what I'm looking at right now. So I like to go in the money, as many of you know. So we take a look at the 140 strike price. What is our break even on that? Well, 140 plus the 23.10 gives us a break even of 163.10. 163.10 is our break even on the trade. So as we start moving up, we're going to see an increase in this on these call options. The implied volatility is in the 16th percentile. I went to take a look at that. It's in the 16th percentile. So we're nice and low on that. and that helps us, puts the wind against our back. But what if we take a look and we say we're going to, what did I say our price target was on this? Our price target was around the $200 mark. And if we make it to 200 or anywhere near that $200 mark, then I take a look and I say, what's this 140 call option going to be worth? What's it going to be valued at just intrinsically? Forget about extrinsic value, because that's how I like to do my math. Intrinsically, the extrinsic is just bonus for me. Intrinsically, it's going to be worth, if we reach 200, we're going to be worth intrinsically $60 per share. So that's $60, and we're going ahead and we're purchasing it for, say, 23. What is that what kind of return is that? That's a net, not a gross, but a net return. If it reaches 200, that's a net return of 160%. 160%. So you have to ask yourself, number one, do you like Teladoc? Number two, do you think it's going to go higher on the trade? Number three, do you think, when you've done your own due diligence on this, do you think that setting the bar at 200 is a reasonable, which is right here, setting the bar at about 200 is a reasonable target to hit on or before the August timeframe or the October timeframe, whichever one you're choosing? Even if we did the Octobers, we're paying $26.80 for it. That's still about 100, not 160, but about 140% return. And that's just intrinsic value. Does not even count the extrinsic value. If this thing made a move much sooner, you're going to have implied volatility increases. You're going to have a much more, you're going to have the premium flushed in and a much higher move on that particular option trade. So hopefully you enjoy this, but this is another one that's back on my list and I want to share it with you guys. Teladoc, do your own due diligence, TDOC. And I will catch you guys on the other side of success. Take care and peace out.